Hi, are you looking to get a loan of more than 625,000 but have less than 20% down payment and want a really low rate? Now, I don't have good news for you. A change coming to lending guideline may prevent you from getting such loan for several years to come. Hi, my name is Shashank Shekhar. I am a mortgage broker and a direct lender with Arcus Lending. I'm also the author of two books, First Time Home Buying 101 and Real Estate Unleashed, and I've been featured in several local and national media. What I'm going to talk about is that now the conforming and the FHA loans are up to 729,750. So that's the maximum loan amount for conforming and FHA right now. And they're divided basically into two tiers. You get a better rate if you are 417,000 and under, or you can also get it up to 729,750, which is between 417,001 to 729,750. Now note that varies by county. I live in the Santa Clara County. That's where the maximum loan amount is 729,750. And also most of the counties around Santa Clara County does have that loan amount, like Santa Cruz, San Mateo, Alameda, Contra Costa, San Francisco. Now, so that's what the existing loan amount limit is. But the change that's coming will change the conforming FHA loan limit only up to 625,000. So from 729,750 right now, it will drop down to 625,000. It will still be divided into two tiers. It will still be 417,000 or under as the first and the basic tier. And then what is called a conforming jumbo or an FHA jumbo will be between 417,001 to 625,000. Now, if you want to know when is that reduced loan amount coming into effect, so when is that 729,750 becoming 625,000? Now the answer is depends. And it depends because the official date by when the loan amount can close with the higher and the existing loan amount limit is actually September 30th, 2011. But that's just the official date. The real date is from any time from now till end of August, and I'll tell you why. Is that a lot of lenders have actually stopped doing 729,750 already. A lot of big banks have stopped taking loan applications with higher loan limits. And a lot of them are doing it anytime from now till third week of August, maybe even end of August. It's because they know that they need to close by September 30th, so they don't want to risk taking loan application all the way till the end of August or early September. So again, depends on which lender or which bank you are working with. Some of them may have already stopped taking the higher loan amount, and some of them will stop by the third or the last week of August. Now, what does that mean for you if you're in the market to buy or even refinance? Lower down payment options will go away for loan amounts from 625,001 to 729,750. Right now, you can get an FHA jumbo loan for as low as 3.5% down, or you can get conforming jumbos with as low as 10% down on these loan amounts. But of course, once those loan amounts will go down, you will not be able to get lower down payment options, because these loans will then be considered as pure jumbo loans. And jumbo loans comes with higher interest rate, and they come with higher down payment, which is 20% or more. Also the financing options itself will kind of narrow down, because not all banks and all lenders fund jumbo loans, and even if they do, the qualification guidelines are usually tighter. The credit score requirement is much higher, the kind of assets and reserves that they need is much higher, and of course the down payment requirements are much higher. They also may have other conditions like more than one appraisal and some other loan conditions. Now you may say that the real estate prices may soften a bit because not buyers who qualify now will be able to qualify then, so there may be a little bit less of demand in that price range. And that may be true. So let's look at a scenario where, say, if real estate prices do actually fall down, and then what happens? So I did this table where I say, hey, what if you're trying to buy something which is the 900,000 range, and price goes down by 5%, becomes 855. With the mortgage rate that you're getting right now, which is 4.75 on an average, you get into a jumbo market, and then you're looking at probably more than 5.5 there, close to 5.75. But still, with an example of 20% down, your loan amount here is 720,000. Your loan amount, of course, goes down because now it's a lower priced property, right? So it's 684,000. But if you'll see, the payment actually goes up. So even if the real estate price goes down by 5%, the payment actually goes up by close to about $250. So it's not really in your best interest to hope for the real estate prices to fall down when these loans will then be treated as pure jumbo loans. And so now if you're a little confused, then what should you be doing if you're considering to buy now, or even say refinance in that price range? I would say that if you're considering to buy, you should buy now. And this is what I would say that. It's because the low down payment option will go away. So if you're someone who does not have 20% down payment or does not want to make 20% down payment, you may get into trouble then. You may not have any financing options left. Also, the low interest rate option will not be there because then you will be charged on the jumbo interest rates, the pure jumbo rates. Of course, there will be tighter qualifying guidelines. Also, the real estate prices may not actually soften even after that, because we know that LinkedIn had an IPO, and we know that companies like Facebook, Twitter, Jenga, and Groupon, and other companies, either they are coming up with IPOs or they're getting a lot of investments, which means a lot of these employees are becoming millionaires, or they're getting a lot of big bonuses, or their assets are going up, which means that they would be investing in real estate in this area. And what that means is that even with lack of financing options, the real estate prices may not actually soften. In fact, we had seen real estate prices across most of the cities go up substantially if you look at the median price or the average price for the last couple of months. So if you did decide that this is the time that you would like to go out and shop for the best rates, or would like to get pre-approved, then why not do that by making one call? As we are both a mortgage broker which is approved by several lenders, and we are also a direct lender, so you get the best of both worlds. You can call us at 408-615-0655, or you can just email us at info@arcuslending.com. Also, if you simply just want to remain updated on what's happening on the real estate and lending market, visit my blog, which is incidentally one of the top rated mortgage blogs in the country, and that address is www.lendingexpertblog.com.